going to discuss about the valuation of supply. Um, the valuation of supply is a crucial aspect of GST. First one is transaction value. It is the price actually paid or payable for the supply of goods and services. It includes the amount the supplier is liable to pay but has been paid by the recipient of supply. Inclusions in the transaction value, any taxes, duties, cess, fees, and charges levied under any law. Incidental expenses, it is incurred by the supplier related to the sale, such as packing, commission before delivery or supply. Any interest, late fee, or penalty for delayed or payment of any consideration for any supply. Mm, the next one is valuation of supply in specific cases. Related party transactions. If the supply is between related parties, the transaction value may not be accepted as the true value, and a different method of valuation may be applied to arrive at the correct taxable amount. When goods or services are supplied through the agent, the value of supply is the open market value of the goods or services, the value of which the agent would ordinarily supply them. Exchange or barter. In cases where goods are supplied in exchange for other goods or services, the value is determined on the basis of goods or services exchanged. Free supplies or samples with without consideration may be subject to valuation if they fall under the definition of supply under GST. The next one is reductive value method. The selling price of the goods in the importing country with reduction for cost incurred within that country. Computed value method. The cost of production of goods, including materials, fabrication, and other processing cost, plus an amount for profit and general expenses. Fallback method. A flexible approach using reasonable means consistent with the principles and general provisions of the WTO agreement when none of the above methods are applicable. The next one is import and export valuation. The value of imported goods is determined under Customs Act 1982. The transaction value of imported goods is generally the SIF cost, insurance, and freight, to which customs duties and other charges are added to determine the taxable value for GST purposes. Export of goods. Exports are zero rated under GST, meaning that value of supply is the transaction value, but no GST is payable and input taxes can be claimed. Import of services. The value of imported services is the amount of payable for the supply of goods or services, including any expenses incurred. Importance of correct valuation. Tax compliance. Accurate valuation is essential for ensuring GST calculation, preventing underpayment or overpayment of taxes, variance of avoidance of penalties. It can lead to avoid penalties, interest on unpaid taxes, and other legal complications. Transparent transactions. Proper valuation promotes transparency in transactions and builds trust between businesses and tax authorities. Transaction values as the basis. The transaction value, which is the price actually paid or payable for the supply of goods, is the primary basis for the valuation under GST. The next one is inclusions in transaction value. Any taxes, duties, cess, except fees and charges that are separately charged by the supplier, costs such as packing, commission, and other expenses incurred before delivery of goods or included. Subsidies other than those provided by the government are added to the transaction value. Exclusions from the transaction value. Discounts offered before the time of supply and mentioned in the invoice are excluded from the transaction value. The next one is valuation in case of related parties. Comparable value method. If goods are supplied between related parties, the transaction value may not be accepted and the value may be determined based on the value of similar goods. Computed value method. If comparable values are unavailable, the value may be undermined and determined based on the cost of production, profit margins, and other associated expenses. Special valuation rules. The value of goods supplied through agents is determined by the open market value or at the price at which the agent would normally supply the goods. The next one is free supply and sample supply without consideration. In goods supplied free of cost, such as samples, import valuation for specific supplies, transparency and compliance, preventing underpayment or overpayment of taxes, which is crucial for legal compliance and avoiding penalties. The valuation of supply under GST is vital aspect that ensures the correct amount of taxes